The Financial Survival Network, helping you survive and thrive in the new economy. For a free financial survival toolkit and newsletter, sign up at KerryLutz.com, KerryLutz.com.
1490 WGCH, this is Kerry Lutz. You're listening to the Financial Survival Network. My next guest is here to provide a special precious metals panic report. David Morgan, silverinvestor.com. David, where are we?
Well, we are in a panic. We have seen silver move down almost 25% in 2 days. We're doing this interview on the Friday afternoon, late afternoon Pacific time, after market close, and silver was down about 13% today, closing off to about 31 and change, 31.16 on my screen. And yesterday, silver was off nearly 10%, 9.5, I believe was the number. So we've gone from just under the $40 per ounce mark and closed at about 31 and a little bit more than that. So we've lost $9 in 2 days, and that is upsetting a lot of silver bulls. And gold has been sold off quite a bit as well. Gold actually filled the gap that I kept talking about over and over again on thestreet.com to my members only and to a few other interviewers that were at the time when gold was pushing toward 1900 again, sort of in disbelief that we'd ever see gold all the way down to 70 where this gap was. And of course, gold today sold off as low as 1628 and closed at about 1658. So the gap has been filled. Is this the bottom? Don't know. Certainly, it's extremely oversold. And again, to use the word panic, I think there's some panic, but these are sell-offs mostly due to the fact that these are highly leveraged markets, and the moves in these markets are based on the paper markets, so based on the futures and options markets and the ETFs. They're not really reflective of the fundamentals of the physical gold and silver market. Nonetheless, these paper markets do set the price, and that's what we saw in the last couple of days, is huge price movement to the downside.
Yeah, the tail wagging the dog, as it were. And I was watching it. I can't say I'm totally surprised. You saw it coming for sure. Others, I talked to Rick Ackerman. He saw it coming for, I guess, a couple of weeks. And the fact that it was looking kind of toppy, and I think the disasters going on around the world, it was a good opportunity for the financial elite to give it a last whack, get it down as low as they could, see if they could force some people out and reinforce faith and confidence in fiat currency. But we've seen this so many times, and this is probably a healthy thing, because if it had gone parabolic, who knows what would happen at this point.
Well, a couple of things I want to interject. One, did I see it coming? Yes, I actually did, but I did not see 25% in 2 days. I have said pretty consistently that I saw 33 as a level probably hold, but it didn't. That 30 was definitely a possibility. We saw a touch under 30, some trading under 30 today. I said the worst case I could make a case for would be about 28, which is roughly where Sprott Precious Metals Fund, the PSLV, was started at that level. I don't have any inside information here. This is a guess on my part, but I said, that at the $28 level, if it were to trade there again, it wouldn't surprise me that an Eric Sprott or someone like that might say, you know what, they had a hard time delivering physical metal to me at this price. I'm going to double down or whatever. Now, that's just my opinion, my thinking, my thoughts on that topic. I haven't talked to Eric about that. I just think that knowing what I know about the physical market and how bullish some of these people with deeper pockets are on physical silver, that I don't see much more to the downside. But I'll tell you, I really stay open-minded on the silver market, because it can surprise the best of us.
Yeah, well, public markets always act to frustrate the majority of investors, right? That's their purpose, I think, sometimes, because I've certainly been in that position, God knows how many times. So, but it's a wait and see, but I think, man, if it breaks 30, that really is a good buying point. And I think you're going to see people rushing in there because, under 30, again, no one was really counting on that one. But maybe your other misquoted prediction of $5 silver, you never know, right?
I said we could drop 5. That's past history, and certainly we've done that.
Right.
But no, I don't see it going to 5. But that's funny you bring that up.
Yeah, well, unlikely, and unless there's some major change, there still are these people. Now, the deflationists, they're reinflated their argument that this is a deflationary depression. The Fed can't possibly print enough money to completely debase the currency. The whole argument. And they've gotten more wind in their sails, and I just don't see it. I don't think you see it. I don't think that many people see it, but they're vehement about it.
Well, it's an argument that has been made by some pretty smart people, and I've heard both, and I could argue both cases for probably an hour. And by the time I got done with either case, you'd say, "Boy, that makes a lot of sense, and that's what's going to happen." But the way I've tried to get it to, I believe in Occam's razor, at least most of the time, and the more simple and elegant you can make something and more easily understood, the better it is for everybody's belief system. So here's something I finally came through. It's obvious on its face when I say it, but it took me a while to get there. Sometimes the obvious isn't so obvious. What you really have to say to yourself is, deflationists, the debt depressionists are correct. What they are really saying is that paper trumps gold for the first time in 5,000 years.
Right.
In other words, in paper terms, you're better off holding paper than you are gold because paper is going to become more valuable than gold will. And I don't buy that.
Yeah.
I don't think that's the case. But you can't rule it out entirely. But that's the bottom line if you believe that argument. The other argument, of course, is that the credit markets are going to continue to expand, and they are. It's not a function of how much money they're printing or how much credit they're making available. It's a more accurate way to say it. So the credit system continues to expand. The reason there's such sluggishness in it is because those that want to borrow are not credit-worthy to borrow, and those that are credit-worthy to borrow are so stuffed with cash that they don't want to borrow it, and they don't want to even expend their cash because they don't see any need to expand their businesses in a very bad recessionary/depressionary environment. Why would you utilize your cash to expand when your business is contracting? So you've got to catch 22. Those that want to borrow can't because they're not creditworthy. Those that could easily borrow more money have no need to borrow because they can't expand. The economy is contracting.
Right.
So that means that we're going to see more, I believe, ahead in the next few months. It doesn't mean that the credit's contracting because interest rates are going higher or money's harder to obtain. It's just not right now being, the velocity is very low.
The demand
isn't there. Now, let me just continue for a second. I don't want to ramble, but the point is that there's so much sloshing around the system that it doesn't take much but maybe, a trigger of some type where a trading partner such as Japan or China or someone says, you know what, I'm trading these dollars for fill in the blank.
Right.
Coal, oil, gold, wheat.
Right.
The state of California. I'm trying to be a bit funny. And all of a sudden, the velocity of money picks up substantially from where it is now. And there's enough money or enough credit out there for that to happen at any moment. So to get the argument that, the velocity is low and that, credit systems are dead is where we are at a point in time. But that point in time could change just like the gold and silver markets changed in 2 days. The credit market could change that much in 2 days as well. Believe it or not.
Yeah, that could definitely be the case. Well, David, thanks for coming on and clearing things up a little bit for us. And probably like you and many others, I'm not about to sell an ounce of my gold or silver.
I bought more yesterday.
Hey, good for you. Probably it's a good time to buy that silver at these prices because it's on sale at this point. And morganreport.com and silver-investor.com, right?
It's themorganreport.com and silver-investor.com.
Yeah.
That's right.
And we got links on KerryLutz.com to those sites for all who are curious. All